Facebook finally files to go public. Let's dig into the numbers a little bit. A couple of things that caught my eye that I think very, very interesting. Really just goes to show that Facebook probably didn't need to go public. It had to go public because of legal issues, the number of shareholders it has and things like that. Facebook already has $3.9 billion in cash. That's very impressive for a startup. Of course, this is, it pales in comparison to the money that Google and Apple has on its balance sheet, but $3.9 billion, and now it's going to raise $5 billion from the offering. It makes you wonder, what will Facebook do with the proceeds, this little war chest it's building? Is it just going to go out and hire more coders and build the brand that way, or will they actually make some acquisitions, potentially overseas, so that they can expand further? That could be very interesting. Maybe Facebook also will try and come up with some new products to diversify beyond advertising. 85% of revenues in 2011 for Facebook came from ads. So yes, it's a very strong company. It's growing like a weed, but it's dependent on a very fickle, economically sensitive part of the market. So I think everyone's going to be wondering what Facebook will do with the money once it finally goes public. And one final note on Facebook that I found pretty fascinating is, in all of the discussion about the company and the market it's in right now, it really only listed 3 major competitors, and those were Google, Microsoft, and Twitter. Didn't say anything about LinkedIn, didn't say anything about Zynga. It listed Zynga more as a customer and a partner. About 12% of revenue came from that gaming site. And it didn't mention anything about Groupon, which, I guess that makes sense. Groupon is, social media, but not really the same thing as Facebook in that regard. What Facebook did actually do, though, that was also pretty fascinating, was it gave a group of peers that it cited that it's going to use when deciding compensation for 2012. And that's where you have the laundry list of big tech companies. They had Apple, Amazon, Cisco, eBay, LinkedIn, and Zynga in that group as well, among others. And that is pretty interesting. It just goes to show, when Facebook employees are coming up for raises and new compensation packages, these are the Silicon Valley firms that Facebook is going to be comparing to try and figure out, what it should be paying its employees. So now we just have to sit back and wait a couple of months, roadshow, all that. When Facebook finally starts trading, then we can start speculating about how much it actually should really be worth.